We've seen Bitcoin go back to all-time highs, and I think people are now starting to say, well, this is something that I maybe should consider having in my part of my portfolio, and if I'm going to have it, maybe it's an alternative to gold or a complement to gold as something within that real asset bucket.
Welcome to the How Canada Works podcast. I'm Trevor Miller. Along with me, as always, is Adrian Blake. Adrian, how are you doing today?
I am very well, thank you, Trevor. Doing great today. Had a car breakdown over the weekend, and now that I think that problem is solved, I'm having a fantastic day.
Gotta hate those inconveniences when those sorts of things happen.
Right.
So you can't plan for that.
Nope.
Well, Adrian, I'm super excited today about who our guest is. It's someone that I've wanted to talk to for a while in an area that I've wanted to know more. And you know, over the last little while, it's kind of come to light a little bit more on this topic. And we're starting to get a better picture of what that is. So I'm excited that we're going to have Greg Taylor from Purpose Investments come talk to us about Bitcoin and what the heck cryptocurrency is.
That's right. Greg Taylor's the Chief Investment Officer for Purpose Investments, and Purpose launched the first Bitcoin ETF in Canada. And so...
in the world?
Oh, there you go, in the world. Maybe I should know that.
Yeah. Yeah, so they're definitely innovators, which is pretty interesting for them to be able to see this far ahead, do something, and now we're seeing some traction with the US, which is pretty cool.
Yeah, and it makes investing in Bitcoin more mainstream available to your typical investor. So that doesn't necessarily mean every investor should have a position in Bitcoin, but perhaps it's worth the discussion to understand why and how this investment came to be, and then they can work. The client can work with us to figure out if it's appropriate for their given portfolio and situation.
Exactly. So yeah, really excited to get him on here. Before we get to that, if you like this content, please make sure to like, subscribe, follow us, and all the other things that you do with podcasts or YouTube and all that stuff. So without further ado, let's get Greg on here and learn a little bit more about this. This side of the portfolio that seems to have really taken off in the last few years. Good morning, Greg. Thanks for joining us today.
Oh, thanks for having me.
Great to have you on. Thanks for joining us. Yeah,
really excited to talk to you today. I think there's so much interesting things happening in this crypto Bitcoin world, and a lot's come in the news over the last 6 to 12 months there with what's going on in the US with them finally getting the ETF, joining something that you guys have been doing for a little while, right?
Yeah, we at Purpose launched the world's first physically backed Bitcoin ETF over 3 years ago, and we all know the Americans launched it in January. And yes, to their credit, they basically copied the structure we did, which is it's nice to be copied, I guess, and shows that what we were doing is working. But it definitely caused some excitement in the crypto space, and now I think we're all waiting for the next shoe to drop with an Ethereum ETF coming shortly, hopefully this summer.
Well, yeah, and it is funny because even though we've worked together, we have Purpose on our shelf that we use. The Bitcoin side of it as an ETF wasn't even on my radar as an advisor until BlackRock did their thing in the US. So, I think this is kind of interesting to that with you today. But before we dive into that, would you mind just taking a second to let us know a little bit about yourself and, kind of your journey and what it is you do with Purpose?
Yeah, so I'm the CIO and the head of the portfolio management team at Purpose Investments. I've been at Purpose for getting close to 7 years now. Prior to that, I ran growth equities in Canada for, I guess it's getting close to 20 years now. So, and growth equities in Canada are kind of an interesting, I don't know if it's oxymoron, the word. When I started in 99, it was all tech stocks, and then it became mining stocks and oil stocks. And then we had that little blurb where it was cannabis stocks. And so growth managing in Canada can be a very evil topic, but moving over to Purpose, we've got a suite of assets across equities, fixed income, and alternatives, and crypto is the most recent thing we've joined to our asset suite. And I think we're really excited about it. I think this is going to be an asset class that is going to be around for a long time, and it's really only in the first 15 years of its existence. And as you touched on it, I think it's something that all clients now need to have a strategy of now how all investors are going to need to have a strategy and how they're going to use it in their portfolios, and if they really want to go on that journey and see where it fits.
Perfect. So you, I would think of crypto as something that was kind of on the fringes of most people's awareness, especially for a clientele like ours, which is typically approaching retirement. We've got a fairly mature clientele, and so not something that was in maybe the mainstream kind of the topics of conversation around the dinner table, but I feel like it's matured a long way since that. And obviously, you guys producing the first Bitcoin ETF mainstreams this in a really significant way. Can you share a little bit more about what that actually means in terms of making this something that people can consider in a real way?
Yeah, and there's a lot of things we can touch on there and expand into. But yeah, crypto has been around for, as we mentioned, like a little over 10 years. And Bitcoin being the first real mainstream one. And yeah, it started off as something that I think teenagers and people more in the techie space were doing in their basements. And Bitcoin mining was something that you'd heard people do in their backyards or basements. And it wasn't really mainstream for a long time. But then we've all seen the price appreciation of the coins, and that caught some attention. And then I think really where it became something that became more of a dinner table topic was really after the pandemic, because we had a lot of people. We all know that one of the responses to the pandemic and the lockdowns was just the amount of money printing that just was thrown out there by central banks, by governments, and not just in North America, but globally. And that had a few different things. The first thing was that it absolutely caused inflation, which is a problem that we're still dealing with these days. But it also caused a lot of people to sit back and think, well, what is the value of my dollar? Like, how do I look at my fiat currencies, which is like the amount of Canadian dollars, US dollars that you can just print? And I think a lot of people got disenchanted with saying, well, do really central banks care about these dollars when they just double the supply of them in circulation in a year? And people were looking at ways to protect against that and have something that isn't at the whim of the central bankers that they can just double supply. And that's traditionally where you try and go back to more of a real asset theme. And when you talk about crypto, I'm sure some people are going to say, well, that doesn't make sense. You can't call it a real asset. But the way I look at it as a real asset is a commodity or something that is going to be working better in times of inflation. And then the supply is going to be less variable versus the whims of central banks. So traditionally with real assets, that's commodities, that's gold, that's real assets, that's real estate. And I think when you're looking at cryptocurrencies, it kind of fits into that bucket as something that is going to be a diversifier, is going to work in times of duress, and is also going to protect against some potential volatility around what the currency faces. So I think that's where people are going to look at with Bitcoin, and that's certainly where it became more of a mainstream topic. So coming out of 2020, 21, when we had a lot of that move around volatility, I think that probably got a little overhyped, but we've seen Bitcoin go back to all-time highs, and I think people are now starting to say, well, this is something that I maybe should consider having in my part of my portfolio, and if I'm going to have it, maybe it's an alternative to gold or a complement to gold as something within that real asset bucket.
You talked about Bitcoin and crypto being an alternative to currency and possibly to gold and some of these other assets. But I think so many of my clients and a lot of what we've seen over the last number of years has been a lot of volatility within the crypto world as well. We've seen some, really huge rises and then some big downfalls. Is this more a factor of age of crypto itself? And, Adrian and I both have young kids and, they can be pretty volatile at times as well. So is it, like our hope that they'll one day grow out of this? Is that what you're anticipating with crypto and Bitcoin? Is that as it matures, it's going to start becoming less volatile and we're going to start seeing a little more predictable results?
Yeah, and I think that's a good way to think of it. And certainly when things are early in their life cycle, they tend to be more volatile. And again, it goes back to this is an asset class that has not been that long. But as it becomes more broadly used, as you get some more institutional investors in this, as you get more adoption from more mainstream the banks and central and governments getting involved, that tends to dampen out volatility. So I think as things mature over time, as you start to see more and more people get involved through things like the US ETF or our ETF in Canada, that I think that'll widen the investor base, and with the widening the investor base, that should take down the volatility. Again, we just think like people talk about Bitcoin, and that seems to be the topic that everyone's focused on because it is the biggest of the cryptocurrencies. And who's to say it's going to be a long-term winner? But I do think that looking at just demographics and different things out there, that there is going to be a bright future for cryptocurrency. And right now, the odds are betting that Bitcoin is going to be the one that is the leader out of that. But who's to say there's not another one like Ethereum or something else that comes on to become the dominant cryptocurrency? So I think cryptocurrency as an asset class is going to be around for a while. And right now, it looks like Bitcoin is the leader and has the brightest future.
So you just said that Bitcoin looks like it's the leader right now and has the best future. Are you seeing any of these other cryptos kind of coming in and displacing it or giving it a bit of a run for its money? What are you anticipating happening over the next few years when it comes to crypto and Bitcoin?
Well, Bitcoin's certainly the largest, the most liquid, and I think it's got the simplest use case to understand. Really, when you think of it, it really isn't designed to do that much. It is really, in its simple forms, digital gold. So it's something that's supposed to be a store of value, a means of transaction back and forth. But there's not a lot of things you can do with the Bitcoin network. So I think when you look at the simplest use case for digital currency, Bitcoin has basically solved that, and it's simple by design. And I think that's not the flaw; that's just the use case, and it's working for that point of view. I think the next big thing is to see what within the whole cryptocurrency world, what else can be out there. And I think that's where some of the people that are very optimistic on Ethereum are looking at Ethereum being the next big cryptocurrency because it's something that is more of a digital contract. You can do more with it to build different applications on it. And it's more something that if you're looking at how to use a blockchain, Ethereum is going to be a nice way to get that going. So I think Bitcoin's still only 10 plus years away. I think the next and the altcoins or some of the other cryptocurrencies, those are even earlier in their life cycle. And that could be where there's a lot of excitement, but there's also a lot more risk in that area.
Greg, you were talking about it being like a little bit of a comparison to gold or commodity. I think of it a little bit, I think of Bitcoin specifically, a little bit like a speculative equity, because I mean, in the short term, I don't think they necessarily match the equity markets, but over a longer period of time, they do seem to go up when the equity markets go up and down when the equity markets go down, the broad sense of the term, I think. And I would argue that a commodity, part of what makes a commodity is some other use for it besides the price of it, right? The speculation of it. Even gold, as much as we don't use it for much anymore, we do use it for something. And I guess my question here is like, how do you think about that? How do you think of Bitcoin as a commodity? And I understand the blockchain could be a commodity. There's lots of use cases for that. And I wonder if we need to separate Bitcoin from the blockchain, or Ethereum from the coin or the token from the tool it can also be. But how do you think about that?
Yeah, and there's a lot of ways to go, and I think you're right. That is the big differentiation. Anyone getting into cryptocurrencies for the first time, that's the biggest thing they need to figure out is the difference between the blockchain, which is a digital ledger to verify transactions, and then Bitcoin is something that's built on top of that, which is kind of one of the first use cases to come out of the blockchain. So the difference between the Bitcoin and the blockchain, I think, is super important. I think in the whole argument between Bitcoin and digital gold, I think it really goes back to that. Yes, it was more volatile to start. That yes, it absolutely was more correlated to the Nasdaq. The joke a few people made was looking at Bitcoin, it was basically a 3 times levered the Nasdaq ETF, and I think that's probably more because it was an asset that was going up in times of higher risk tolerance for investors. So when people are feeling a little more positive, they were taking on more speculative risk. They were going into both tech stocks and also the Nasdaq, and I think that's something that happens in the early days of something that's growing this fast and taking on this much adoption. I think that's where we could see a pivot, and maybe the next 10 years of the life of the Bitcoin is going to be acting more like a traditional commodity that you talked about, or more along that digital gold space, more along the lines of something that's, I hate the word store of value, but that's being thrown out there as something that is going to be less correlated. So I would expect, again, that volatility to come down a little bit as more people are getting used to it. It's also becoming such a big asset class that it's going to be harder to see it move around as much as it had before. But again, not all cryptocurrencies are created equally. I think some of that volatility is absolutely going to still live in some of the altcoins or some of the smaller coins. Ethereum's kind of in the middle of that, where the scale to become something that's similar to Bitcoin, but it's also got a lot more use cases, and there's a lot of excitement about what you can build on top of that network. And if something is built off of the Ethereum network and becomes something widely adopted for digital currencies or just staking or different ways to use DeFi, I think that's where you could see some fairly big growth. So Ethereum might be viewed more along the growth spectrum, and I think the dream or the hope is that Bitcoin will start to separate and act a little more like gold and less volatile, and something that's different thing can work well in portfolios.
Okay, so switching gears then, for the retail investor client, what does this purpose ETF do for them? This is probably a basic question, but what was the point in offering this to the retail market for you guys? And is it the same story with the possibility of an Ethereum equivalent coming, or is there some other benefit there as well?
Yeah, and that's really where we came to add value to this, is that Bitcoin, as we mentioned, has been around for a while, but it's been harder to get access to open to just, if you want to go out and buy Bitcoin today and hold it in its traditional sense, you'd have to open a separate crypto exchange. You'd have to have a separate crypto brokerage counterparty, because you can't just go to a bank and then buy Bitcoin, or the TSX wasn't going to sell you Bitcoin. You had to go to a crypto exchange. And the problem with something that's that early days and that new is really that it isn't regulated. And there are a lot of people that are having really bad experiences buying crypto, whether it's Bitcoin or some of the other altcoins or NFTs. And they either were getting scammed by using a bad counterparty, or they were forgetting how their keys, because you have to have a key to get into your crypto account. So if you lost it, there's really no recourse. You can't go to an insurance company or to a different regulator and say, "Oh, I lost my key. Can you refund my crypto?" Because then they're going to laugh at you, because that's not something they regulate.
CDIC didn't cover
what
that?
We tried to do. I don't think they did. I think a lot of people wish they did. But, but so what we tried to do was to bring a marriage of bringing cryptocurrencies towards a format that works for the average investor. So what we did is, with the world's first physically backed Bitcoin, is what we will do is we will go out there, and if you buy into our ETF, we will go and buy physical with a reputable counterparty. We use a lot of the big guys like Coinbases of the world that are the leaders, and they're regulated by the U.S. government. And we will deal with them. We will take those crypto holdings that we purchase. We'll put them in a cold wallet, so it's safer. We're going to make sure we don't lose those keys. And then it'll trade on the TSX basically at NAV. You can hold it in your TSFA, you can hold it in your RSP, you can hold it in your regular investor accounts. For an advisor, that's really good, because then they can actually see what of their portfolio was in crypto, whether they can say, "Hey, you got way too much of this. Let's talk about this, and maybe we should pare it back." Because what was going on was you had a lot of people that were either being successful in crypto or losing a lot of money, but their advisors didn't really know, because it was kind of held outside of their traditional brokerage account. So having it in an ETF format is a simple way for people to get access to it. We take away a lot of the stress. We try and minimize a lot of the counterparty risk. And it's also a way for advisors to get a full spectrum of what the financial investment and profile is for their underlying clients. So that's what we brought to the table. And I think that's the next step. And that's why we've got an excitement with the US ETFs coming in January of this year, they did come in January of this year, because that just opened it up for them also to take away a lot of the sticky points of getting access to it and opening up to a much wider investing audience.
Lots there, and lots of interesting. I love the due diligence side of it. I want to get back into that in a second, but one of the things that you kind of talked about, and the way that you guys have it set up is called a spot ETF. What is that? And I think you kind of touched on it a little bit, but yeah, if you can just dive into that a little bit more, and what that is and how that differentiates from the regular ETF that we'd see out there.
Yeah, so just talking about commodity ETFs, and I think the simplest way to look at this is 20 plus years ago, looking again back at gold. Gold was the commodity that people wanted to get access to, but the only way you could do it was to go to the Scotia Macata desk and buy a gold bar or something and put it in your backyard and bury it or put it in a safe. But when there was a GLD was the first really big US ETF that came into like physical gold. And we brought that to Canada with another ETF. Kilo was on the back of that. But what we've done with our Bitcoin ETF is really not reinvent the wheel. It's just bringing the format that the original gold ETFs were brought to Canada and use that for the cryptocurrency. So we will go out and buy the physical crypto, put it in a cold wallet, and then the auditors will look at it on a regular basis to make sure that we actually have those coins. So it'll trade at NAV and it won't trade very much different from that. The other ways people were getting access to crypto that had been out there are two different types of ETFs. One was a closed-end fund. So the Grayscale fund, which is GBTC in the US, was really buying, it was a closed-end fund. So you buy a basket of that commodity, but it will trade at a premium or discount to NAV. So that's something that underlying investors have to get used to. And that can add a lot more volatility because some of the premiums and discounts were quite massive, almost 20 or 30%. So the underlying coin could move, but you're not getting the price appreciation you want. And then the next wave that we had other commodity ETFs is more futures backed. So what that is you're getting exposure to the underlying commodity through the futures market. And the problem with the futures market is, not to get too technical, but there's a roll every month. So you buy a contract and you're always going to be losing some on the roll into the next contract. So it's not going to trade as smoothly as the underlying. So a spot ETFs, what's worked best in the other commodities, being gold or some of the other, the copper one just came out. And I think this is really the best way to get access through an ETF format versus futures and closed-end funds.
You kind of also talked on some of your due diligence. What are some of the pain points that clients are going to face now? Like, we go back and it's not that too distant a future where we were, watching Sam Bankman-Fried and all these fraud cases. And I think there was somebody that was in charge of one of the cryptocurrencies that died and his password went with him. What are we seeing now as this has matured a bit and now that we have the ability to put something like Bitcoin in an ETF? What are the pain points, or have those mostly kind of dissipated a bit?
Well, they've gotten better, and I think that's the whole ecosystem that's gotten healthier and matured over the last few years. But absolutely, that's one thing that we spend a ton of time on is really due diligencing the counterparties, because there's so many people that are in the system, in the crypto world. And you just, unfortunately, when you get a lot of people that make a lot of money quite quickly and there's a lot of speculation out there, you get a lot of bad actors. So we spend a lot of time making sure we're doing due diligence to only deal with the highest quality counterparties and to make sure that, and we've been, to our credit, quite happy that in the 3+ years we've been operating, we haven't had a single failed trade. We haven't had a single coin get lost or misplaced. And we kept the fund acting as it should. Because one of the pain points for people, if you were to go back to that traditional system, is you might have a lot more counterparty risk. You could have been dealing with a Sam Bankman-Fried or an FTX, and if they suddenly get caught up in some investigations and have to freeze all your accounts, you don't really know what you're going to get next. There's lots in history. There's Mt. Gox, which was a Japanese exchange that 10 years ago failed, and everyone lost all their coins on it. Now they're in the process of getting some back now, but that's really the big thing, is counterparty risk is super important in this. It's getting better because it's becoming more regulated, but it's still something that people need to be focused on. And one thing that we hope to take the pain point away by going through our spot ETF structure. So
just one thing super quick on that was you mentioned, a lot of the things that happened previously with, the fraud and some of these different things happening where that part isn't regulated, but you guys are the BlackRocks of the world you guys are regulated. You mentioned that there's audits that happen on a regular basis in your world that would also protect the clients on that side, right?
No, absolutely. We're regulated. We follow under the guidelines of the TSX and the OSC, and then everything has to be going through that. And there are audits on a regular basis. So I think at the end of the day, regulation is going to help this market. And I think adding the increased regulation into crypto on the back of the FTX failure and other problems is going to be good news at the end of the day, because it's going to bring more oversight. And I think oversight is something that needed to happen in this. As much as we can go back to say that people are buying Bitcoin because they want to have something that's not at the whims of central banks. I think it's kind of good to have a little bit of regulation, and I think that's something that was needed, and it's probably going to be a good news story coming out of this. And adding an ETF that has to go through audits and different regulatory approvals is going to overall increase that due diligence.
Perfect. I was going to ask you what you thought an appropriate allocation would be, and I might back down from actually asking that question because it really comes down to an individual client position and working with us as their advisor to figure out how that fits their bigger picture. So I'll switch to a different thought. Like, are there any books or materials or resources that you think if somebody wants to explore this in more detail for their own education, like where do people go to get this kind of information in what is a fairly new type of thing?
Yeah, there's a lot of good books out there, and I've forgotten the name of the author, but the Bitcoin Standard is a great book that goes through kind of history of currency and how Bitcoin and cryptocurrency is the next evolution of this over time. So I'd recommend looking into that book. And to touch on your question about just how it works for portfolios, you're right, every individual is different, so different use cases for everyone. But again, it goes back to that real asset bucket. And I think this is something where if investors were comfortable having 3 to 5% of their portfolio in something like gold or a commodity that's going to potentially add some hedge against inflation, I think you can probably take a third of that allocation and look at putting some into crypto. But again, not all portfolios are created equal, and not everyone can take the same risk tolerance.
Yeah, reasonable.
Very good. Greg, really, really appreciate your time today. I learned a lot. I'm sure that Adrian learned a lot as well, and hopefully, so did all our listeners. So really, really appreciate your time today.
Well, thanks for having me. And it's definitely an area that's going to keep evolving, and I'm happy to come back again to talk about our future developments in the space.
We'd love that.
Thanks, Greg. It's great to chat with you. Appreciate it. Well, Trevor, I think that was a fantastic conversation with Greg. I hope that we stood on the line pretty well between a technical conversation and one that's approachable to our audience as well. We want to make sure people get value out of this. Greg had a lot to share there, and I really found it interesting. And I think that we didn't answer the question for people about whether you should have Bitcoin in your portfolio, because I don't think that's something we can do over a podcast. But I really hope that the understanding around the structure of the ETF and why it exists in the first place offers some kind of comfort to those people that otherwise would be looking to make that kind of an investment. And then there's obviously the opportunity to talk to us about more.
Yeah, and honestly, I just love having Greg on here, and then just even further than that, have him as a resource, and having that pre-conversation with him was really just keeping it at that 3,000 foot level and making sure that we're not getting too into the weeds, and but having that as a resource where we can send him a message if there's things that we don't understand. Clients can come to us if they need something a little bit further than that. But what really interested me in that conversation was how he foresees that. Now that we have the ETFs come in, especially in the US and some of the larger scales, what they do on the due diligence side, how that risk is not averted, because, it is still, pretty speculative, but how that's been brought down, quite a bit, as opposed to, the guy that dies knowing the password and now it's gone, which we've seen, and the fraud and all these things that have kind of plagued cryptocurrency, over the last number of years. To now have a process in place with a company that is, follows the regulations and has, audits and all these things, it puts my mind at ease a little bit more into just what this is going to look like. Even as speculative, I don't want to lose all my money because somebody forgot a password, right? Like, that just to me seems ridiculous.
Yeah, and I think it just put it back on the map for me as well, because I feel like with Bitcoin in particular, it hits the news cycle and then it disappears. And so you don't, for me, I wasn't sure if this was still an expanding opportunity or if we're over the hill. And, talking to Greg really helped me understand that this is kind of a going concern, despite the fact that the news media might be distracted by a few things at this point in time.
Yeah. And, kind of going with that news cycle, it was either the sexiest investment out there, where it's like people are making millions and millions of dollars on this thing, or it was on the other side where it's taken a hit and people have lost their shirts. So I think from the conversation with Greg, it seems like it's sort of normalizing a little bit, and the peaks and valleys are becoming a little bit more normalized. So losing it off that news cycle is probably because it's not quite. And I hate to say not. It's still volatile, but not quite as volatile as where it was, where you're just having these 200%, 500% run ups in a matter of days, and then almost the same on the other side, where it's fallen a little bit more in line with what we would expect from a risky portfolio.
Yeah, it sounds like it's maturing. It's maturing both as a technology, but it's also maturing as an investment. And part of that is the availability of this type of product, this ETF structure, to be able to invest in something as speculative as Bitcoin is, and other cryptocurrencies, of course, with time here. So a fantastic conversation with Greg. I'm glad we were able to get him on. He was just the perfect person, I think, to talk to this topic for us. And so, what a wonderful conversation, and I'm looking forward to the next one.
Wonderful. Me too. Thanks, Adrian.